window.
Hello, traders. Gary Wagner with the Gold Forecast here, approximately 11 a.m. in Honolulu, Hawaii. It's Tuesday, the 7th day of June, and this is the Daily Report. We have gold in very quiet trading this session, currently up about 50 cents. It's been up 50 cents, down 50 cents. You're looking at a 60-minute candlestick chart. I'm putting that up to show you the kind of range that we have been looking at over, let's say, the last couple of trading days. As you can see, that range right in here, low right around 1520, high around 1550. We've got some range there. But as you can see that over the last few days, it has quieted down a little bit. Now, when we look at it from this vantage point, and I want to look at it from a couple of different vantage points today, you can see that we have, in fact, been on a nice, clear climb since we have hit this low right here, and this is 1461. This was that low that we had. Of course, we got in at 1488. So that would be, let's say, right around this area right in here. And you can see that we have seen this market genuinely move up quite nicely. Although it's been range bound at certain points, it has shown us unequivocally some very, very nice gains in the marketplace. Now, we did have the federal chairman, Bernanke, come out and speak. I believe it was in Atlanta today. And his remarks were, and I'm going to quote, he said that the central bank should maintain record monetary stimulus to boost an uneven and frustrating slow economy. Now, does that beckon to the possibility of a continuation QE2 or QE3? He goes on to say the economy is still producing at levels which is well below its potential. Consequently, accommodative monetary policies are still needed. Until we see a sustained period of stronger job creations, we cannot consider the recovery to be truly established. Well, I would agree with him there. We need to put more people to work here. But as you can see, this marketplace has absolutely been on an upward move, and my sentiment is it is headed to new highs. Now, the fact that it's headed to new highs is great, but at the same time, I am noticing, as we talked about a little bit yesterday, this real band of resistance that we're getting at 1550, and these are those not record tops, of course, because 1577, this is our record top right in here. This is our all-time historical top. And when you look at this, you see that this is a 76% retracement of this basic move. And the move that I'm looking at was the move from the top to the bottom when we fell to the lowest point during our correction. Of course, it was my belief that we had a very, very nice pennant formation. That was the type of correction that we had. And since that time, as you can see, this market, although in a rounded way, in other words, the tact wasn't straight up, but in a rounded way, the market has been trending higher. However, when the market hit that 76% retracement right in here, we do have a marketplace in which we need to see the market begin to take out this area, because this has become critical resistance. And as you can see, although the market's trading up about 60 cents and has been higher or lower, and again, this is a 628-minute chart, so each candlestick, there's approximately 4 of them per day. You can see that this is quite an area that we need to be able to move above. Now, in terms of straight support, 1533 unequivocally, I see a good band of support right in here. And I think that once we get out of this range that we're trading in, and you can see that in fact we are in essence range bound within this trading range right in here, we need to break and break to the upside. Now, we could, of course, according to our Elliott wave count, and I'm counting this as wave 1, we could in fact see the market trade lower, and that would be our corrective wave 2, and then we go back into an impulse 3. It's still too early to tell, because traders, when we get this type of consolidation, typically when we used to see it, it used to be an indication that the market was getting top heavy and we would see a retracement. However, the dojis that we have seen in gold, these periods of consolidation, tend to come before spurts also. And you can see that kind of activity right in here. You can see this gets range bound, but then you do get that spurt up. So we really have to take a serious look to see how this market wants to play out. And then lastly, for the chart I want to look at today is our Henkin Ashi, but it is the basic standard chart that we use for our Elliott wave count along with our channel lines. I've simply converted our daily into a Henkin Ashi. The reason for looking at this at the end is even though I do have concerns, you can see that these candle sizes got smaller. You can see how it grew up in this area. We had that absence of tails, but that very consolidating area, that range-bound area right in here, you can see that we actually got a red candle there, but we hadn't then changed into the small body. We lost the tail, we gained the tail, and then even a smaller body today. We are still in green. And so we want to take a look to see how this market wants to genuinely react. But I truly believe that we are in wave 5, but we want to pay close attention to the minor count within that. This has been Gary Wagner, wishing you, as always, good trading. And we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see. And when I look in my window, so many different people to be, that it's strange